Hey, so Abby, can you help me with another question? I have another question. Yeah, of course. I mean, it is Ask Abby, so absolutely. Good point. So I'm looking to start a house flipping business, but I don't have the funds to kickstart it, and I don't really know what to do. Well, yeah, I mean, traditional home loans can take a long time. Your credit score has to be killer. You have to have a down payment. There are lots of nitty-gritty details with that. So have you ever considered a hard money loan? I mean, I haven't even heard of it. What is a hard money loan? Good question. How about this? I'll sum up everything you need to know about hard money loans in 1 minute. A hard money loan is a loan that you can get based on the property you're trying to purchase. And then the lender can use that property as a safety net in case you don't pay back the loan. One of the biggest advantages of hard money loans is that your credit score is not a factor. Huh, that sounds pretty simple. I wonder why hard money loans aren't as popular. Well, that's because hard money loans can be dangerous. If you don't have a clear plan on how you're going to repay it, it could cause huge damage to your credit score. Plus, the interest rates on these loans are super high, so the pressure is high because you could lose any investment you put into it. Yikes, that sounds scary. So what happens if you don't repay? Yeah, that's bad news bears. Not only will the lender take the property, but you'll also lose any investment you put into it, and your credit score will take a bad plummet. So long story short, you should only take out hard money loans if you're sure you can repay it, and if getting a quick loan is your only option. Whew, that's a lot of info in 1 minute. Thanks, Abby. You got it. If you have any more questions to ask Abby, put them in the comment box below, or go to creditanddebt.org and reach out to one of our financial coaches for free.